What is going on, guys, and welcome back to another very exciting video. In this video, we are talking about one of my top holdings in my portfolio, and that is, of course, Alibaba. Alibaba has had a very interesting week. It is down this week, almost 5%. And over the last week, we've seen a lot of differing trends between Alibaba and the broader market. So in this video, we are going to be talking about why that is, what is going on with the market that is causing this deviation between Alibaba and the S&P 500. And then at the end of this video, we're going to take a look at what analysts are expecting for Alibaba over the next year. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. I want to start off by taking a look at Alibaba's chart. So as we mentioned, the stock over the last 5 days is down almost 5%, 4.77%. But over the start of the week, we saw Alibaba basically trade sideways. And then come Wednesday into Thursday, the stock tanked down and then continued to tank down throughout Friday to all the way down to $106.33. If we zoom out to the last month, the stock is now barely up over the last month. It is up only 1.67%. And actually, if we look at its highs over the last month, we can see that the stock is down even more than 5%. It's down closer to 15% from its highs of the month. And the S&P 500 has a very different trend over the last 5 days. We can see that it is up almost 2.5%, 2.39% over the last 5 days. And a very kind of opposite trend is going on. The market, again, traded sideways basically Monday through Wednesday, and then Wednesday night into Thursday, we can see that the stock market ran up by a lot. And a lot of this came on the back of a lot of big companies reporting earnings. You had Apple, you had Amazon, you had Google all reporting earnings this week. And a lot of those occurred, Wednesday after hours. And we could see that the market reacted in a very positive way to that news. On Yahoo Finance, right here, we are comparing Alibaba in blue to red, which is the S&P 500. And this is over the last 5 days. So what you could see is, again, the market and Alibaba kind of traded sideways. Alibaba had a little spike up here. The market also had, a little bump up, nothing too crazy. And then into Wednesday, we saw, again, this big run up from the market and from Alibaba. But what's very interesting is this back end. So we see a small dip in the market. We see a small dip in Alibaba. And then we see the two trends kind of deviate. And what happens here is the market moves up in a massive way, but Alibaba moves down in a massive way. And Alibaba kind of continues moving down while the market basically trades sideways. So what I believe is happening here is a sell-off from investors who either got in early on Alibaba, like 3 months ago when Alibaba was trading around $70, $60 to $70. There are obviously people who bought back then who want to lock in, the 40%, 50% gain that they've made over the last 3 months. And then there are also people who potentially bought, a year ago around $120 to maybe even $130, and they just want to get out of the stock because they're tired of the headache. They've seen and felt Alibaba run down over the last year. They saw it run all the way down to $60, $70, and then they are just trying to get out of the stock at break even. We've all gotten into a stock like that where we're just like, if this gets back to break even, I'm gonna be happy. I'm just gonna sell out and get out of the stock. And there are plenty of people who do that in the market, who basically get frustrated with the stock and then just sell out right when it gets back to, break even price. So I think there's kind of a mixture of that going on. And the big thing with that is, with earnings around this time, a lot of people are going to look to get out of a stock like this that they either have locked in a bunch of gains on or that is back to break even for them. And then they're going to look to rotate it into some of the bigger tech companies. So that's why we saw the market run up in a fairly big way, heading into earnings. Obviously, you have the earnings run up from the anticipation of earnings, but you also have people rotating their money out of other stocks that they've either, locked in these gains on or, basically broken even on, and moving it into some big tech companies like Apple, like Amazon, like Google right before their earnings to try and basically get in the stocks before they run up, on those earnings announcements. In terms of valuation, Alibaba is still sitting at a relatively low PE ratio. We can see here that it's sitting at a 12.44 forward PE ratio. And compared to the broader market tends to trade and is trading right now around a 19 to 22 forward PE ratio. So obviously there's a little bit of a discrepancy here. And what that means is over the next year or so, a lot of times you'll see money rotating into these lower forward PE ratio companies over the higher forward PE ratio companies. So if you look at like a Microsoft over the last year has traded around like a 27 to 33 forward PE ratio, and it really hasn't gotten, beaten down as much as some of these other stocks like Alibaba. And what ends up happening if we end up going into a bull cycle is a lot of people will buy into these lower valuation companies because they're getting more bang for their buck. And then basically you'll see, an Alibaba run up by potentially, 20% over the next year, where a Microsoft might only go up by 5%. And when we look at their earnings, there's a lot of positivity around Alibaba's expectations. We can see that their current year, people are expecting anywhere, around $7 to $8. And then for next year, they're expecting a fairly large amount of growth. We can see that the average estimate is all the way up to $9 with a high estimate of around $11.50. So there's a lot of positivity with China opening up their economy that their earnings will rebound in a massive way. And analysts have been reacting to China opening up their economy in a very positive way. We could see over the last 30 days that there are actually 19 analysts that have revised up their expectations for EPS. Keep in mind that I am a shareholder of Alibaba, so I am bullish on the stock. I believe that it is going to be going up over the next couple years. I think with Alibaba and China reopening, that it is going to have a huge impact on the Chinese economy, and that is going to help Alibaba grow, especially throughout Southeast Asia. I think there's a lot of opportunity in Southeast Asia for Alibaba to expand their business and really, capitalize on a lot of that population growth that's happening throughout India, throughout China, and throughout really the Southeast Asia region. So that is all my opinion. Make sure you keep in that in mind. Invest in companies that you personally believe in. Do not buy a company just because some random guy on YouTube is talking about it. Make sure you are doing your own research, looking into the numbers, and determining if it is the right fit for your portfolio. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.